this idea that as soon as you go public, the minute a company goes public, you need to start playing with your numbers and playing with projections, and that the consumer is the one who loses. That doesn't feel...
No, I'm not totally... I think Ashton's a really good investor. We're in some companies together, but I don't agree for two reasons. One is I think ultimately the point of being public is to provide a lot more transparency on the company and its practices, certainly a lot more than you see from a private company. And second, from an investor standpoint, as someone, for example, who's been in Uber since 2011, I wish we had gone public a couple of years ago. The $90 billion valuation kind of target that came out this week is great, but I think that would have been considered on the low end probably in 2016 or 17. So really? I think, I think so. I think that Uber was
because that's down from 120.
Well, it's also just down from Uber being in a position of incredible hype and incredible excitement and enthusiasm to having a year and a half of Travis Kalanick going through lots of problems.
I'm not questioning your underlying idea that there was more hype, there was more kind of momentum that would have been behind it before. But when I hear 90 billion, I still think that that's pretty much on a very high
It's
number.
A big number, but internally, sort of 2015, 16, people were easily thinking 100 billion, and not like 5 years out in the future.
The flip side is, had you gone public then with the hype, you would have gotten a huge price.
And then we're going way down.
People would have thought that they were going to be doing helicopters and self-driving cars, and all this stuff was about to happen. And then the price, I'm not suggesting it would have been in half, but all of a sudden,
look, absolutely.
And then you're playing against a very difficult comp. You have employees who are being incentivized on the new stock. It gets complicated.
Yeah, but at a certain point, look, obviously as a VC, we want our money as soon as we can possibly get it. But generally speaking, at a certain point, you've got to go into the public markets and deal with all the challenges it brings. And yes, the stock will go up and the stock will go down. But if you're going to try to avoid that forever, I'm not really sure why you're doing this in the first place.
We heard that as soon as the volatility really kicked into the markets last year, even beginning of October, that people were already concerned and thinking about not wanting to take companies public in that environment, that they were more interested in getting bought or maybe partnering up with somebody else or going back for another round of financing.
Yeah.
When we've seen the market move up almost 10% just since Christmas Eve, does that change, or does the volatility and the concerns about volatility just kind of hover over everything?
I mean, I think it's really hard for anyone to have a crystal ball and say, this is the exact day that you should go public. The whole point of this show is investors are watching and trying to glean some information to make better decisions. And so I think if you're a company like Uber or Airbnb or Palantir or anyone that's looking at 2019, if that's what you want to do, you should do it. And trying to read all the tea leaves, predict what's going to happen with Trump and China and everything else is impossible.
So where are we? If you think we've kind of missed the golden age for anybody to go public at this point, how would you kind of grade where you think this year stands?
I think it still should be really good. What's exciting about it is when you look at the list of companies that are potentially going public this year, if you say, what is the kind of great American innovation over the last decade, that's really what you're seeing in the list of 2019 IPO companies. So that's really exciting. Whether ultimately it ends up being the share price 10, 20% down of what it would have been at the absolute peak, that's possible. But as Andrew pointed out, ultimately these companies have to keep growing and start making a profit and doing things, and that'll ultimately drive the value.
Rob Kindler was just here, and he made a really interesting comment towards the end. He said that he thinks there will be a lot of public companies that actually go private this year. Can you have it be a great year for public companies to go private and private companies to go public, or does it have to be a binary?
No, I'm not sure it's binary. I think that ultimately sometimes lots of excitement just drives momentum and drives enthusiasm and all of that.
What's the chance that some of those companies on that list, I'm looking at Slack, maybe some of the ones that are smaller, just get taken out? A Microsoft, an Amazon, a Salesforce.
You know what? Slack's a great company,
sure. We want to be in the enterprise space.
Yeah.
These guys own the enterprise messaging component for a huge part of corporate America and the corporate world right now. Let's just take them out.
Would be really hard for Uber or Airbnb or Palantir to do that, but Slack or maybe Pinterest, there are some smaller ones that could happen. And if ultimately they think they can get close to the price they want and eliminate the risk, that's worth it.
What's your take, by the way, on WeWork and perhaps even more importantly, SoftBank, which has been behind WeWork, and even the investor base behind them, which is Saudi, how much money they have, what their interest in all of this stuff, and what it's done to valuations long term?
Yeah, I mean, SoftBank is a really unique animal because we've never seen anything like this in venture before, right? I mean, even like Sequoia has an $8 billion fund, and everyone's like, oh my God, $8 billion. And that's a fraction of what SoftBank has raised and is deploying. So, it's hard to almost assess what their impact is because it's so unique. In terms of WeWork, it's really kind of a binary thing. Either you believe that they have figured out the future of commercial real real estate, in which case even the current valuation of $47 billion is probably undervalued, or you think it's a really well-designed and clever kind of workaround, in which case it's wildly overvalued. And it seems like one of those things where either it resonates with you or it doesn't, and obviously it resonates with SoftBank.